In 1994, Jeff Bezos quit his six-figure Wall Street job to sell books out of a garage. His family invested their life savings. His boss told him he was insane. 9 years later, Amazon stock had crashed 95% from its peak. Analysts called it Amazon.bomb, and Bezos was being mocked on magazine covers. Today, Amazon is worth $1.7 trillion. Bezos himself became the richest person on Earth. But here's what nobody tells you. Amazon's success wasn't about luck, timing, or even the internet boom. It was about three specific strategic decisions that you can apply to your business today, whether you're in Santon, San Francisco, or anywhere in between. By the end of this video, you'll understand exactly how Bezos outplayed every single competitor, survived when hundreds of startups died, and built the most dominant business machine in modern history. Let's kill the myth right now. Jeff Bezos didn't start with books because he loved reading. He started with books because he did the math. In 1994, Bezos made a list of 20 possible products to sell online. He analyzed each one using specific criteria: low cost, high variety, and universal demand. Books won. Here's why that decision was genius. The largest physical bookstore in America carried about 150,000 titles. The largest book distributor's catalog? 3 million titles. That's a 20 times advantage for an online store. No physical retailer could compete with that selection. Customers couldn't walk into a Barnes & Noble and find every book ever published, but they could on Amazon. This is your first lesson. Bezos didn't pick a passion. He picked a wedge, a way to offer something impossible for traditional competitors to match. Now, here's what this means for you. Too many entrepreneurs start businesses around what they love instead of where they have an unfair advantage. I see this in South Africa constantly. Someone loves coffee, so they open another coffee shop in a market with 30 coffee shops. No differentiation, no strategic wedge. Bezos teaches us to ask different questions. Where can I offer 10 times more selection, 10 times faster delivery, or 10 times better pricing than anyone else? What can I do online that's impossible offline? That's not motivational fluff, that's strategy. And Amazon's book business grew so fast that by 1997, just 3 years after launch, they went public. The IPO raised $54 million. Bezos now had fuel, but he also had a problem. Everyone could see his model worked. Competitors were coming, and then the entire internet economy exploded. Between 1999 and 2002, the dot-com bubble didn't just pop. It obliterated companies. Pets.com, Webvan, eToys, all gone. Billions of dollars evaporated. Amazon's stock price collapsed from $106 per share to just $6. The company lost 95% of its market value. Investors were furious. The media wrote Amazon's obituary. But Bezos did something most founders couldn't. He ignored them. Here's what actually happened inside Amazon during the crash. While competitors were cutting costs and panicking, Bezos kept spending on infrastructure. He built warehouses. He invested in technology. He expanded product categories from books into electronics, toys, and kitchen goods. Why? Because he understood something critical. The internet wasn't a fad. E-commerce wasn't dying. Bad businesses were dying. Amazon had real revenue, real customers, real logistics. By 2003, Amazon reported its first full year of profit, $35 million. Tiny compared to today, but it proved the model worked. Now let's be direct. Most of you watching this will face a version of this moment. Your business will hit a wall. Revenue will stall. People will doubt you. The temptation will be to retreat, play it safe, cut everything. Bezos shows us the alternative. If your fundamentals are sound, double down when others pull back. But notice what I said. If your fundamentals are sound. Bezos had millions of real customers and real transactions. He had data proving people wanted what he sold. He wasn't gambling on hope. This distinction matters. Stupidity and courage look identical from the outside. The difference is evidence. Do you have proof your model works? Do you have customers who keep coming back? If yes, push through the doubt. If no, pivot fast. Here's a business lesson worth billions. In the early 2000s, Amazon had a problem. Every time they launched a new feature on their website, it took months. Different teams used different systems. Everything was tangled together. So Amazon engineers built something for themselves, a set of standardized internal tools to make building faster. Then someone asked a dangerous question. What if we sold this to other companies? Everyone thought it was insane. Amazon sold books and DVDs. Why would they sell computing infrastructure? But in 2006, Amazon Web Services launched. AWS let anyone rent Amazon's computing power by the hour. No massive upfront investment, no servers to maintain, just pay for what you use. Today, AWS generates over $90 billion in annual revenue. It's more profitable than Amazon's entire retail business. Netflix runs on AWS, Spotify runs on AWS, half the internet runs on AWS. This happened because Bezos built a culture that allowed experimental bets. He didn't need AWS to be guaranteed. He needed it to be possible. And here's your takeaway. The biggest revenue opportunities in your business might not be your core product. They might be the tools you built to deliver your core product. I know a logistics company in Johannesburg that started selling their route optimization software to competitors. It now makes more margin than the actual delivery business. I know a restaurant group that launched a food supplier service because they'd already solved procurement. Same principle. Look at what you've built for internal use. Your systems, your processes, your software. Could someone else pay for access to that? This is how you find hidden leverage in businesses that seem ordinary. Amazon's cloud business came from solving their own problems, then realizing those problems were universal. Bezos banned PowerPoint at Amazon. Instead, every meeting starts with reading a 6-page memo in complete silence. Why? Because PowerPoint hides sloppy thinking. Bullet points let you get away with vague ideas. A written memo forces clarity. But the deeper philosophy is this: Amazon is customer-obsessed, not competitor-obsessed. Bezos writes in his 1997 shareholder letter, which he still republishes every year, "We will make bold investment decisions in light of long-term market leadership considerations rather than short-term profitability." Translation: Amazon optimizes for what customers want, even if it crushes margins today. Free shipping through Amazon Prime? It cost billions to build, but it made customers happier. One-click ordering? Customers loved it. Recommendations based on browsing? Customers bought more. Every decision traces back to one question. Does this make the customer experience better? Not. Does this make us more money this quarter? Now, here's why this matters to you. Most businesses obsess over competitors. They check what rivals charge, then price slightly lower. They see a competitor launch a feature, so they copy it. They're always reacting. Bezos flipped it. He asked, what do customers wish existed? Then he built that, regardless of what competitors did. When Amazon launched Prime, competitors thought it was financial suicide. Unlimited fast shipping for $99 a year? The math didn't work. Except it did, because Prime members spent 3 times more than non-members. Customer obsession became a profit engine. For your business, stop watching competitors. Start watching customers. What do they complain about? What do they wish was easier, faster, cheaper? Build that. If you're in e-commerce in Cape Town or Lagos, can you offer same-day delivery when competitors take a week? If you're building software, can you simplify onboarding when competitors require training? Find the gap between what customers want and what the market delivers. That's your wedge. Every year, Bezos names one of Amazon's buildings Day 1. He's asked why. His answer: Day 2 is stasis, followed by irrelevance, followed by decline, followed by death. That's why it's always Day 1. Amazon treats every day like a startup. They assume competitors are hunting them. They assume customers will leave if they stop improving. They kill their own products before competitors do. The Kindle? It cannibalized Amazon's book sales. They launched it anyway. Why? Because if they didn't, someone else would. This is long-term thinking, and it's rare. Most businesses optimize for this quarter's results. They avoid risks that hurt short-term revenue. They protect existing cash cows even when the market is shifting. Bezos did the opposite. He told shareholders from day one, "We're not optimizing for quarterly earnings. We're building for a decade from now." Some investors hated it. They left. Others stayed and became billionaires. Here's the hard truth for you. Long-term thinking requires short-term sacrifice. It means investing in systems that don't pay off for years. It means saying no to revenue today for more revenue tomorrow. And most entrepreneurs can't do it. They need cash now. They have bills, payroll, stress. I get it. But here's the compromise. Protect 20% of your time and resources for long-term bets. Not 50%, not everything, just 20%. If you run an agency, spend 20% building a product that could replace client work. If you run a retail business, spend 20% testing a new distribution model. If you freelance, spend 20% creating assets that generate passive income. Bezos could afford to think long-term because Amazon had cash flow. You might not yet, but you can still allocate some capacity to building what comes next. That's how you avoid irrelevance. Let's make this tactical. 3 things you can do in your business right now based on Amazon's blueprint. First, identify your wedge. What can you offer that's 10 times better than competitors in one specific dimension? Not better at everything, 10 times better at one thing. Maybe it's speed, maybe it's selection, maybe it's price, maybe it's personalization. Write down your answer. If you don't have one, you don't have a strategy, you have a hobby. Second, build for customers, not competitors. Interview 10 of your best customers this month, not a survey, actual conversations. Ask them, what's frustrating about our industry? What do you wish existed? What would make you spend more with us? Their answers are your product roadmap. Bezos built Amazon by listening to millions of customers through data. You can do the same with 10 conversations. Third, make one long-term bet. Right now, pick one thing that won't pay off for 12 months, but could transform your business in 3 years. Maybe it's building an email list. Maybe it's creating a subscription offer. Maybe it's automating your operations. Allocate time to it every week. Protect it from the tyranny of the urgent. Bezos made long-term bets when Wall Street screamed at him. You can make one when your inbox is full. This isn't theory. This is how Amazon became Amazon. And whether you're building a tech startup, a consulting business, or a side hustle while working full-time, these principles scale. You don't need $1 billion. You need a wedge, customer obsession, and the guts to think past next month. Here's the bottom line. Jeff Bezos didn't build Amazon by being smarter than everyone. He built it by being more strategic, more patient, and more willing to ignore short-term noise. He picked the right wedge. He survived when others quit. He found hidden revenue streams. He obsessed over customers, and he played the long game when everyone else chased quick wins. You can do the same, not at Amazon's scale, maybe, but in your market, with your customers, using these exact principles. If this breakdown gave you even one idea you can use, subscribe to Empire Blueprint. Every week, we decode how the world's greatest companies were built and show you how to apply it. Next video, we're breaking down how a small logistics company in Africa became a $100 million business by solving one specific problem everyone else ignored. You don't want to miss it. Now go build something real.